Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely fantastic day. Bitcoin has seen a short-term rally resulting in a move through the 107,000 resistance and into 109,000. In today's video, we are breaking down the short-term and macro charts in extensive detail, focusing on price targets. We're going to be discussing where the price is most likely to move to, how the interest rate decision is likely to impact that, and where we believe Bitcoin could potentially reach, whether it be a downward break or an upward break into a new all-time high. We, of course, are also going to be going over the macro charts as well as discussing the total altcoin and cryptocurrency market cap charts. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, join us on Telegram. That is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and really everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. If you are interested in joining our VIP channel to support the content, you can do that by clicking the pinned comment of the free channel, scrolling up to find our membership information, our trading track record, a video showing you inside the channel, and everything else you need to know. Go ahead and check it out. We'd love to have you in there. Let's dive into the content. So taking a look at Bitcoin over the past 24 hours, we have seen a breakout of that compression between that 50 EMA, the red line, and that 200 EMA, that blue line, resulting in a break into the horizontal resistance at 106,000, which was corresponding with that level in which we were unable to close the weekly candle above for 2 consecutive weeks. So we've now broken back above that horizontal level, which has triggered a short-term rally toward the upside to now retest some of these prior levels of liquidity, these prior levels of resistance. You can see here acting as a resistance and here acting as support. Yet again, prior support becomes future resistance. We are still very much in the macro channel between, of course, the lows at 101.5 and these highs at 110. We're going to be discussing what this means and how this is likely to influence macro targets both downward and upwards in the future. Let's go ahead and take a look and start with that market data. Taking a look at our 24-hour liquidations and 24-hour volume over here. Volume is up 72% at 253 billion. That is expected as we approach interest rates. Again, volatility is going to pick up, but most importantly, as we exit the weekend, volume does pick up. Looking at liquidations, up 45% at 311 million. Of the 311 million, 126 million coming from long positions and 184 million coming from shorts. Very interesting that over the past 1 hour alone, we saw 91 million of the 126 million in 24-hour liquidations come from longs. So a lot of longs getting liquidated here in that past hour in that rejection from that prior level of resistance. We can see again, as we depicted at the start of the video over here, this prior level of historical resistance became support and it has flipped back into resistance again. So a lot of longs getting liquidated as they enter high leverage positions as we start pushing into 109 again. People long out resistance have been chopped up yet again. We're going to see that in the liquidation data. So moving from there to our DXY. DXY is behaving as expected. Again, we're not really anticipating too much movement. What is really interesting is going to be the macro direction. So at the moment, the overall expectation is we saw deviation toward the top side of the channel. Therefore, we expect continuation toward the bottom side. Measured move target of the channel will be taking us down to, if we look over here, that 93 region. So the expectation on the macro is that we move to 93. How that plays out, how quickly it plays out, that is up to the market to decide, of course. Based on interest rates, that will massively impact how volatile we see this chart. But overall, we are expecting macro trajectory to be downward. The S&P 500 is looking good over here. And as we just said in yesterday's video, we were able to absorb a lot of that selling pressure. We saw a few things that were very notable on the short term. Number one, we saw the breakdown of this RSI trend line which essentially triggered a short-term correction into this change of character level, into this area of support, which we were able to then bounce from and push through that bearish divergence, which we are currently doing right now. So a good sign for the S&P 500 moving into interest rates. We are showing a lot of strength over here. Ideally, we still want to see that respective downtrend here on the RSI breakout. If we break through this level, that in our eyes is going to be confirmation that we are going to test these prior all-time highs. So we are moving into interest rates in less than 2 days. There is a chance we push into these highs, and whether or not we break through will be very dependent on how that interest rate meeting goes after the decision. We'll talk about that more later, but in our opinion, the most important thing here is that we have been able to sustain above that 5,700 level, and thus the macro trajectory is going to be upwards provided this level is able to sustain. If we drop back below 5,700, we do run the risk of steeper corrections. Until then, the overall macro trajectory is going to be bullish. And I think that is a very fitting assessment for the S&P that we can also apply to Bitcoin. When we look at Bitcoin, that is still going to be the overall assessment. The overall assessment for Bitcoin is bullish from a technical perspective and a horizontal and a price action perspective, while we remain above this prior high. So this is our weekly high. If we are able to sustain above here, the expectations are that we could continue upwards, but there is a risk that we see corrections develop as we are seeing exhaustion. So the expectation is bullish, but we do develop the risk here of these corrections, which we'll discuss in today's video, if of course we lose that weekly range high. But it's really that weekly range high that is going to determine whether or not this consolidation results in a continuation upward and into a new all-time high, or deviation and then a continuation into a correction. So the most critical level you're watching, again, is that weekly high, that this level is able to sustain on the weekly. If it does, fantastic. If it doesn't, we do suffer the risk of a very brutal pullback. That is it, guys. Let's jump into the crux of the analysis. Let's jump into Bitcoin. Before we do, if you are interested in supporting the content even more, you can go ahead and sign up to BitGet, BitUnix, or BingX with the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll support me making this content, and you'll be trading on exchanges I use and I trust. Go ahead and check it out or play an ad, and we'll get back into it. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and dive back in. I want to start on the total cryptocurrency and total altcoin market cap charts. Starting on the total cryptocurrency market cap chart here, we can see we have been gradually pushing sideways now since essentially mid-May. We've been chopping around. We've had some wild swings to 3.5 trillion to 3.1 trillion, but more or less we have been able to sustain above the $3.19 trillion level of support, which is going to be this gray box over here. This is a critical level of support because it acted as a major point of resistance prior to a major leg toward the downside. So we know major historical resistance becomes major future support. With that, we have also seen a massive reduction in overall volatility, and we know that because the distance between the 50 EMA, which is the red line, and the price action has gone from widening to narrowing. We are seeing a compression here between the price and the 50, which is signifying that volatility has been dropping. Now, this is generally what we see before we have either reversals or major moves in a particular direction. So we are expecting, again, number one, the price action for the total is bullish provided it remains above the 50 and the 3.19. All we are seeing is a reduction of volatility after a large move toward the upside, a reduction in volatility after a massive surge in volatility looks like exhaustion, but it is not always exhaustion. What it looks like doesn't necessarily mean it is. If we are having absorption with that exhaustion is being absorbed, and that is technically bullish. So the fact that we are sustaining above these supports is actually a relatively good sign for now. However, we don't have enough data here to confirm we are going to go lower or higher. We have to see how the price reacts to our critical levels. So when we are looking at confirmations for lower price targets, we are watching for the loss of 3.19. If we lose 3.19, that is going to be confirmation that we are moving towards a 200 moving average, which is at that $3 trillion level. That is going to be worst case scenario. But provided we are able to sustain above this level, the probabilities that the market rises is definitely still there. So pay very close attention to the total cryptocurrency market cap, because depending on where this does move, it is going to massively influence the altcoin market cap, and of course Bitcoin will influence this chart here. So moving over to the altcoin market cap over here, the altcoin market cap is not looking as good as the total. We do have, what we have over here is a downtrend on the daily, spanning back from the rejection at that $940 billion level. If you have been following the channel, you would know $940 billion is a major point of resistance and a bullish trigger point, meaning for altcoins to enter the next leg upwards, for us to see an equivalent move like this, right, where we saw, a 2-3 week period, or at least a week period was it, of altcoins performing exceptionally well, 20, 30, 40, even 50% returns. When we see the break of 940 billion, we will enter this low historical resistance range. We know this because we've had prior volatility in the range between these two horizontal points. So we should see a dramatic increase in bullish volatility, which could take us to 1 trillion. That will result in a strong move upward for the altcoin market cap relative to their Bitcoin pairs, which will result in altcoins performing exceptionally well. So for us to see that happen, we need to first break through this respective daily downtrend, and for us to even break this downtrend, we need to pass this baseline of the Ichimoku cloud. Here is where it becomes tricky. We do not expect altcoins to perform exceptionally well until we break the confluence point between the downtrend and the baseline, which will facilitate a rally to 940, and then we need to break 940 to see a continuation. So altcoins will start to do very well here, and will do very well above that level. Now, we need to do all of this before we lose these lows. All we have here is, of course, our higher lows. We've got our low, we've got a higher 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 low. If we break that pattern, meaning if we see the price action drop below 815 billion, that is going to be a warning sign for a potential steeper correction to around 780 billion. That could dismantle the probabilities of this continuation, but it's important to note we would only see that correction develop if the total cryptocurrency market cap drops below 3.9, and the total cryptocurrency market cap is only going to drop below 3.9 if Bitcoin loses the weekly range high. So that takes us to the weekly range high. Why is this important? How can we use this to project expectations and targets for Bitcoin? And what have we done historically from a bullish perspective and a bearish perspective? We'll discuss that, and then we'll zoom even deeper into this section of price action on the short term. So let's jump into it. The weekly range high. We've got heaps of examples of how the price action responded to prior weekly range highs just over the last 4 years. We're going to show you bullish and bearish scenarios. Let's start off with the bullish scenarios. So the bullish scenarios, we've got multiple examples. Number one, we had a horizontal consolidation developing through the dates of April to October 2023. This was in form of a horizontal consolidation. So point number 1, the first retest, point number 2, point number 3, point number 4, and breakout on point number 5, validating the 5-point rule for any kind of structure. We had point number 1 as the range high. With point number 1, we had a downtrend on the RSI develop, representing that during this period, we had a horizontal resistance, the price was moving sideways and the momentum was decreasing, eventually breaking through the horizontal resistance, breaking the RSI, facilitating a rally toward the upside, breaking through that range high and sustaining. The key point I want you to remember here is that when we broke through the range high, we did not drop back below. We were able to sustain above and continue into a new consolidation pattern. Very important. We then moved into a new consolidation pattern. We had our horizontal range high, but the overall structure we had was a descending parallel channel. We had this descending channel formation. This is our overall structure. With the overall structure, we had a downtrend on that RSI. The downtrend on the RSI eventually broke toward the upside. Where was it? Over here. The downtrend on the RSI eventually broke toward the upside, which was around this point, resulting in a continuation through the pattern, through the range high and into new highs, again developing yet again another period of consolidation. Again, the key point is when we broke through this range high, we did not drop back below it. We were sustaining above and we continued upwards. That takes us to December 2024. We had yet again another consolidation. In this instance, we had yet another horizontal consolidation. Unfortunately, with the horizontal consolidation, we did break toward the downside, but we did have a downtrend in the RSI, which eventually broke toward the upside, indicating a positive momentum shift, which occurred at the Gaussian channel upper band and the 50 EMA, which we've said was the trigger for a continuation upwards, and we saw a continuation upwards. Surprisingly, well, at no surprise, taking us through that prior range high. This is where we're at. We're broken through the prior range high. We are sustaining above. If we want to see the price react similar to what we've seen before, which is continuations upwards, the key point is that we need to sustain above this weekly range high. Let's show you what happens if we don't. What we can see here is a pattern on the weekly, which is a very simple deviation setup. Now we can see this on all sorts of time frames, but this is the most obvious and most clear one. The weekly chart, range high after consolidation, breaking through the range high, inability to sustain, marks deviation with a bearish divergence resulting in a correction. Now, I'm not showing you this to tell you this is a macro top or that we will see a macro correction. I'm showing you this to show a similar reaction and price action when we see deviation from range highs with negative momentum. Okay, we need to see the negative momentum there as well. It's not just a deviation setup, it's a deviation setup with negative momentum, which specifically tells us at the price above the prior weekly high, there was not enough demand from buyers to sustain the price, and thus it drops back into areas of liquidity where demand is found. Okay, that is how the price action moves. So when we're looking at this, the key dividing factor between the deviation setup and then the breakout of the weekly range and continuation is whether or not we sustain above the weekly range high. If we sustain, we continue upwards, in simple terms. If we break down, we continue downwards, in simple terms. If we had to extrapolate that downward and upward break into targets and trigger points, then we are looking at other things, such as the 62.09. The loss of the 62.09 historically has resulted in corrections. Where could we see the price action go to? Well, then we're looking at things such as visible range volume profile gaps below the price action. 98,000, 94,000 potential targets. Where does that take us on this chart? Well, it takes us to a perfect level of liquidity, which is right over here at 94,000. So we have those potential realistic targets in play if we see those breakdowns. So that is the defining difference between whether or not this turns into a deviation or whether or not this is consolidation before expansion. We're showing you examples now. Now we need to dive into the short term to discuss how each of those scenarios could develop and then what the subsequent targets could be. So short term price action. To put simply, we are in a consolidation. This is nothing more but chop. With this chop, we have resemblance of a horizontal consolidation. Now, in a perfect world, I wouldn't call this a perfect horizontal consolidation, as we have broken structure toward the upside, had an early deviation before we had a 0.1. But if we are looking from, an optimistic perspective, we do have a weekly range high, or a range high here, and a respective range low. Now, regardless of whether or not we call this a horizontal consolidation or not, we are consolidating between two horizontal points, okay? The only difference is we can't be sure about a measured move target based on this consolidation because of the fact that we do not have a very clear a traditional horizontal pattern. When I validate my structures, I use a 5-point rule, and I can't use a 5-point rule to validate this because, again, we broke the entire pattern at 0.1, so we can't validate it with a 5-point rule. But when we're looking at a horizontal level, we can still say that this is going to be a bullish trigger and this is going to be a bearish trigger. Simply what that means is a price point when broken, the probability is dramatically shift in favor of the direction of which the price is broken. That is the definition of a trigger, okay? So if we break the range low, we have a greater probability for a directional continuation down to 94,000. If we break the range high, we have a greater probability for a directional continuation up to 115,000, okay? And what happens between here is nothing more than chop and consolidation. So here is the most important thing. The goal is not to dramatically concern yourself with the price action between these levels. That's not the goal. The goal is to develop an understanding and a plan to react if these levels were to break. So let's talk about that. If we break the range low, we enter a low historical resistance range, which is seen over here, a large amount of volatility upon the break upwards. We will likely feel that toward the downside with a large amount of bearish volatility. 100,000 breaking results in 98 to 94,000 targets. If we look to the upside, we enter price discovery. Again, an equivalent low historical resistance range. Price targets 114, 116, so equivalent 115,000. Those are the targets of Bitcoin. For this to occur, we need to see the price break up. Now, when we're looking at potential triggers for that, we do have FOMC. If FOMC comes out bullish, we will likely see the price rise. But more importantly, if the Federal Reserve meeting, which is after, has a bullish tone, we will likely see the price rise. If it has a bearish tone, meaning uncertainty, not sure when they're going to drop interest rates, wait and see approach, we could see the market pull back into high time frame levels of demand. That is it for today's analysis, guys. Pay attention, okay? The most important level is that weekly range high. If we lose that level, we drop the 62 on the RSI, we break this, we enter deviation, and we see a correction as low as 94,000 potentially, okay? Very, very worrisome. As we see that play out, we test the Gaussian channel upper band, we lose the Gaussian channel upper band, we could see a steeper correction. Best case scenario is we see what we've seen before. The weekly range high does not get lost again. We sustain above that level and we'll see expansion toward the upside, breaking through 110. Key level, 110,000 for the next bullish move upwards. Key level, 104.6K, 104.5K on the weekly for the continuation downward. Okay, that is it. Until then, we trust what the charts are telling us. Indecision, okay, chop, consolidation. It's not about predicting, it is about preparing. Thank you for tuning in. Catch you guys on Thursday. Have a fantastic rest of your day. I'll see you then.